Hello there, Mavericks. Imri here from the currency side of the firm with today's market roundup. It is Wednesday, October 4th. So today we'll be going over the trading day. We're going to take a look at what's been going on in the equity markets, take a look at a couple commodities as well. We're going to examine the major indices to see what's going on there. We're going to take a look at some of the internals driving this market, and then we're going to go through a few potential trading setups.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So kicking things off with some market analysis. Now, as we can see, all the major averages were up on the day, small caps pretty much flat. The big news for me is how much oil has given up over just the last few trading sessions. It remains to be seen whether this is going to be a complete collapse in oil. Spoiler alert, I don't think it is. I think we're going to find support fairly soon, but this is a very healthy correction nonetheless. And it is a boost for anyone out there that's been pointing the finger at energy for continuing to drive, stubborn inflationary readings in the broader economy. Now, taking a look at the S&P 500, this is a very interesting price chart. If you asked me a couple of weeks ago, I would have said, yeah, we have further downside. Now, however, I'm starting to turn bullish. I think we've met, from an ELL Wave perspective, the minimum requirements here for a market decline, an ABC correction. You pair that with the fact that we're very close to the 200 period moving average. We're right along this support line, which is that dashed blue line on the bottom, which is a channel that I've shown previously in these video updates. And finally, we have the oversold reading on the RSI. So that's the relative strength index. None of these things on their own is necessarily extremely compelling, but when you combine all these things together, it leads me to believe that at the very least, we should see a significant snapback rally here, which might take a few bears by surprise. But like I said, my money is on this is the end of the correction, and we're now going to see a powerful rally out of here. It's a little bit different from the Qs. So here, from an ELL Wave perspective, it would really be more analytically satisfying if we got one more slight new low. It would also complete a measured move target. So you can see here, I've got letters A, B, and C in parentheses. A very common target for the C wave is for it to be equal in length to wave A. And right now, we're a little bit shy of that equality projection. In other words, the measured move target. That measured move target comes in right around 347.50. So we're not too far away. We also would like to see one more slight new low to complete a fifth wave, which in turn would complete wave C. And then I can see the NASDAQ joining the S&P 500 in an upwards rally. So I think the S&P could lead a market recovery here. And then the NASDAQ will likely take over from there. Taking a look at the heat maps here, this is a pretty impressive day. Microsoft up, Apple up, Tesla up over 6%, and the energy trade, which was one of the best trades in recent times, that looks to have given up the ghost. So we're seeing some rotation here for sure. I was taking a look at XLK earlier, right? Technology ETF, and that's looking like it's showing signs of life again too. So I'm seeing signs of bottoming in the broader market. No surprise that that's translating to all these various sectors here. Tech doing very well, communication services doing well. I think the semiconductor trade is going to be hot again. NVIDIA, however, my money is more on AMD at the moment than NVIDIA. We're going to take a look at AMD a little bit later. And then auto manufacturers, it's really just Tesla running the show there. So despite the signs of life that I'm seeing in the market, according to our scoring system, we're still at a -3. Now, this is where your approach to the markets is going to determine how you trade. There are folks and traders out there who take a more reactionary approach to the market. In other words, let's work with what the market has to offer us, and that will work extremely well in a trending environment. In a more choppy environment, however, a reactionary approach could get you, chopped up. As an Elliotician, I prefer to take a proactive approach, which means I'm looking for turns in the market. Now, just because I'm looking for a turn in the market doesn't mean I'm trying to bottom tick the market or top tick the market. I'm still not trying to catch necessarily a falling knife all the time, but I am trying to look around corners and anticipate turns. Doesn't mean I have to trade the turn as I'm anticipating it, but it means I do want to be 1 or 2 steps ahead. And I'm seeing a lot of bearishness out there. And to me, as something of a contrarian, I would say that leads me to start adopting a bullish stance and preparing myself to go long. So I did raise a fair bit of cash here as the market sold off as we entered the fall season, and I'm now getting ready to cautiously start deploying that cash once again. Okay, so in terms of potential trades, Caterpillar's not quite ready yet, but it's something that I've had on my watch list the last time I did one of these updates, and it remains on my watch list. AMD is the one I'm really excited about. And then on the neutral side of things, NVIDIA, PCVX, and then the potential bearish trades, Eli Lilly and Goodyear. So we've got a few diverse names here in the mix. So AMD, really like this. It's not time yet. I really would like to see a strong breakout out of this chart pattern and holding above both moving averages. If that's the case, I think we're going to make a new high, well into the 130s, possibly the 140s and beyond. So I really like this from an asymmetric risk perspective. Risk reward on this one should be really good. Vaxcyte, trading in a channel, this is too wide of a channel for me to consider it a base. So, at the bottom of the channel, I would get a little bit more bullish. At the top of the channel, I'd get a little bit more bearish, right? That's how I'm looking at this until we get a decisive break out of this channel one way or another. And then finally, we have Goodyear. So this looks like a pretty cool low base to me. We had a strong drop, took out some prior pivot points. We're below the 20 and 50 period moving averages, and we're basing. And I would expect to see us test the $10 range in fairly short order. In terms of tomorrow's outlook, risk-off sentiment still dominates, but like I said previously, I'm seeing signs of bottoming here in the market. Economic reports, all eyes on Friday, non-farms. It's going to be very revealing. It's definitely going to be a volatility catalyst. Here's how I like to treat non-farms. I don't like to trade the actual news event. Personally, I like to trade the aftermath. So in currencies, this is a very common occurrence where you're going to get a violent move just as that news report is released, and then fairly typically that move will get reversed. So if it's a very big move, we saw something similar in the Japanese yen when I believe that the Bank of Japan did intervene in the currency markets and bought quite a bit of yen. Dollar yen moved a couple hundred pips in a matter of minutes, and then it gave back that move very, very quickly. Right, so that's something you tend to see on the currency side very typically. You could see that whipsaw action in the broader market for sure too. So if trading that kind of volatility is your jam, Friday is going to be a great day for it. I'm probably going to sit back and wait to see how things play out, and then see how the futures trade into the open on the equity side of things, and then start making some decisions from there. But I've got my watch list already prepared, which is the important thing. I'm prepared heading into Friday. And then as far as earnings go, we have a handful of names here. Nothing too significant. I'm interested to see if Tilray is going to see some significant movement there. Levi, not all that interested. So we do have some names with earnings reports this week, but none of them particularly interest me, and they don't have a place on my watch list. All right, traders, that's it for me. Hope you enjoyed this week's report. Last time I did one of these, I had a few folks email me, which was great. Good to have some conversations with some traders that I wouldn't normally talk to, as I'm coming from the currency side of the firm here. But nonetheless, more than happy to hear from you. If you want to reach out to me, email is Imre, I-M-R-E, @mavericktrading.com. All right, traders, see you next time.